I think let's just bring in our market master. We have Krishna Sanghavi now joining us, CIO Equities at Mahindra Manulife Investment Management. He's with us here in our studios. Krishna, great to have you with us here on the program.
Thanks, Prashant.
Thank you for dropping by. The common refrain when you talk, because the market was down very sharply, it's now come up very sharply, especially, at least on the HNI side, when you speak to people, they say, well, there's no really big ideas now. I mean, it's kind of happened. And now, of course, long term is long term, but I'm saying from here and tactically or even slightly near term, medium term, it's kind of done in that sense. Would you agree with that, or you think there are still meaningful dislocations one can take advantage of?
It's really tough to decipher this. So you always, in markets, we need to have two connects. One is what's happening in global markets. Other is what's happening to Indian markets. So if we analyze the global markets behavior, I think India more or less replicates the trend, if not the intensity, or maybe both at times. And that's what has played out. If you look at this particular entire period of either you look at tariff or even, last 3-4 months, I think so directionally, maybe that color or the signal, I think comes more from global markets. And that's where globally every market is, back to what they were 2-3-4 months back. And so is maybe Indian markets. So that's, on the market flavor. I think from a company specific, you'll always find some pockets where either there is a valuation upside or there is some sort of a earning expectation change based on what, the new environment keeps on offering. So as a macro level, yeah, if 6 months back at a similar level of Nifty, if the worry was that we have some sort of overvaluation in some pockets, I think that worry is not typically changing, because that's what,
that's what I'm saying.
Pretty much same.
The background to my question was, you just assume for now that everything is slightly better now. Overall, things are better. But even with that, stocks have kind of reset. So is there a lot of dislocation really? I mean, something should trade at this and, it's unnecessarily very cheap now. Do you find a lot of opportunity, those kind of opportunities now?
It's difficult. Yeah. I agree. But that's not honestly true at any juncture in markets, right? So if you look at, I think small cap still remains little bit on the valuation side slightly higher. But yeah, typically large cap does offer a value.
But Krishna, to supplement Prashant's question, and we're not trying to be very glum and bleak over here. I know we're sounding like that. But I'm going to ask you a glum question as well. Maybe it's good, right? When everybody is glum in the market, that's when the market surprises. Now, the other thing is that if you just go back, say, 5 years, COVID onwards, there were always very strong narratives in the market.
Yep.
Before COVID, it was all about financials, right? You ride that bull run and it was easy to make money. During COVID, it was IT and pharma. After COVID, we had this government capex theme coming in. Yep. So it was defense, it was railways and capex stocks. A very clear central theme seems to be missing in the market right now. So is this going to become a bit of a grinding, nerve-wracking kind of market? And to add to that, you were saying that there are not too many valuation dislocations, which are very easy, like a plum catch, as they say in cricket, those opportunities. So is this going to become an increasingly tough market to make money in?
No, I think markets are typically driven by narratives. The unfortunate challenge in the Indian markets is that the narratives are shifting pretty fast. Generally we call it as a sector rotation. If you really analyze, last maybe even 2-3 years entire period, you got a nice window of 2-3 months a particular sector drives the market, and then suddenly the relay race back and move somewhere else.
Yeah.
So I think that's a slightly different set of worry on markets, which says that the market participation route taken by investors in India especially is more of a leverage participation. And in a leverage trading pattern, if people want to follow, their time frame by default is short. Now, if from an institutional perspective, obviously we're buying long term, but we also have to go through those price moves on a shorter end, because the other side of participants, typically.
No, I'm saying from an idea perspective, you don't have to think too much. The market was giving you narratives. You just had to find maybe good companies, slightly better valued, clean companies in that theme, and you could make money. Is that time over?
No, maybe that our need for narrative is dominating, but the bigger narrative is clearly the same. India is a growing economy that 10%, 11% nominal GDP growth rate, which honestly has been the core narrative for the last 25 years.
So we go back to the mother narrative now. India's a growth story.
That's a real narrative,
Absolutely,
right?
absolutely.
Everything else is a deviation or a shorter term, orientation by some set of investors. And let's look at markets the other way around. Monday was a great day for all of us. Nearly 4% rally. If you look at the cash market behavior, we had what? FIIs net buyers, DII net buyers. So aggregate number was just 2,700 crores. Now just come to think of it, market of our size and market cap, $5 trillion plus, and you move by 4% on a 2,700 crore net cash buying. So which means clearly the driver is the leveraged participants and their own ability, as they say, in a leverage, your ability to hold perhaps is a function of your risk management rather than your view. So somewhere, some of those things get triggered, but I think the core philosophy is intact for an investor. The challenge is when investor decides to take slightly more bolder call by taking a leverage route to the same pattern of investing. And then, those things happen.
In fact, I take that point on board, Krishna, because in the run-up to that entire skirmish on the border, we did see a lot of HNIs and retail participants that raised cash. And the last few trading sessions, actually, I've seen an outperformance coming from the broader markets, which is telling you more of the domestic money is at play, not institutional. That said, if I look at a couple of numbers, particularly from the commodity companies, yesterday I spoke to Tata Steel, and the management sounded very optimistic after a while.
Yep.
The stock ended lower yesterday, but some of these commodity stocks could do well. On the domestic front, you have the safeguard duty for ferrous names. And internationally, it seems a more rational Trump is what we're looking at right now. How do you view it, and what do you like, ferrous, non-ferrous?
Sure. So I think if you look at the current quarter result itself, we for a change have a season where the commodity companies are actually, driving the aggregate result season by a wider, YOY growth. So that's, first good sign. Clearly some supportive system, let's say on ferrous through the anti-dumping is in place, and as it gets played out, there's something positive there. Even that global factor, like a couple of months back or 1.5 months back, the worry was some trade dislocation, which can impact consumption of, commodities globally, and that's why some sort of price action happened there. Now, come to think of it, over the weekend, we had nice, series of announcements, almost everything happening same time. And so to that extent, commodities also is a good trade because the world is back to it's what it was supposed to do in terms of
for the time
growth.
being.
For the time being. Because
and you prefer
events
ferrous,
are changing very fast.
Right. And you're saying you prefer ferrous.
We typically prefer ferrous, non-ferrous, both. But way the anti-dumping duty has been played out, it gives a nice, visibility. Again, let's wait. It's just a 200-day for now. The larger time frame of next 3 or 5 years can come in as the new order gets, revised or changed. Let's see what happens there.
Have you discussed within your team defense as a theme, so I don't know. It's difficult we can talk about it, to actually put money behind a theme, as Surabhi said, the narrative. And you said, well, those are fads, and you kind of, it's too difficult to say when the fad stops becoming a fad. I don't know if it's a fad, but what's your sense? Defense specifically.
We got to differentiate this fade between the business versus the stock price linked, right? If you look from a business perspective, what's changed in last maybe 3 years, 4 years, especially post-COVID, in this entire talk of Atmanirbhar Bharat and the government stance saying that I need localized, purchase, maybe, entire direction was changed. And a lot of Indian companies are entering that, space, whether in public sector or private sector. So that's a core business momentum of defense, and not only Indian companies can do it for India, but they can possibly start thinking of some exports, etc., as and when things play out. Our fade part may be more linked to the stock price, which is in a way valuation worry rather than a business worry.
No, so have you tried to link both? I mean, are they meeting somewhere at a reasonable level, or have stock prices run up too far?
It does offer you opportunities. Just a question of every day it will never tell you, because markets are never, going to give you exit repricing.
You have exposure in this space.
Yeah, we will have some exposure across, companies, across our funds.
Okay, let's talk growth. Where else are you seeing at least not outlandish, outlier growth, but at least reasonable, sustained growth? Because that seems to have become a problem for large pockets of the market. Whether it's IT, FMCG, we're all crying about growth. Auto, we're just crying about growth.
Oh, I agree. That's clearly a challenge of last 6-12 months, and that's a thought process really, is that as government actually the monetary policy has gone into a favorable accommodative stance, that's the situation in which can ease those growth concerns. Is a core thought, and otherwise nominal GDP, credit growth are more or less converging. All you need is a little bit higher capex, which can possibly have the credit growth higher than the nominal GDP, and that drives a lot of other space in the market.
Okay, all right. Krishna, we appreciate you coming down and, in fact, giving us all of those views. Look forward to chatting up with you soon.